Okay, so this is going to be the first video in a series on investing for beginners. And this video is going to be about what is a stock and what is the stock market. So to start off, just with basics here, what is a stock? A stock is a part ownership in a business. So that's what you should think when you hear the word stock. You should think a piece of the ownership in a business. So if you've ever seen Shark Tank, for example, where they say, I want 10% of the company for $5,000 or $15,000 or whatever, that 10% of the company is what we call equity, which is another way of saying stock in the company or ownership in the company. So a stock is a piece of a business. And the stock market is a place where pieces of businesses are bought and sold, where the ownership in a business is bought and sold. Now that's a public market versus a private market. Private market might be something more like the Shark Tank deal. Like, let's say a friend of yours is starting a restaurant and they want you to give them $100,000 for 10% of the ownership of the restaurant. That would be something more like the Shark Tank scenario, and that would be what we call private investing or private equity. It's a private market. So the public market, as it sounds, is much more public. It's open to everybody, right? You and I, or anybody really, either of the right age or even people who are not old enough to open what's called a brokerage account themselves, can open a brokerage account even under their parents' name. So you can even start investing before you're 18 or 21 that way. And a brokerage account is basically like a bank account where you can buy and sell stocks. You can buy and sell some other things too, but we won't get into that in this episode. But yeah, it's basically just a bank account where you can buy and sell stocks, not to complicate it. So all the time, throughout the day, there's certain trading hours of the market. And during those hours, pieces of companies are bought and sold. And if you have a brokerage account, during those times, you can go and you can buy ownership and sell ownership in companies. And it really is an ownership in a company. It's not just a little ticker moving around on a screen. And to kind of give you an example of that, I have one here. So let's see. And so if you're a beginner, a lot of this might be kind of new to you and might look kind of overwhelming. We'll go over what all these figures here mean, go over what this chart is, what the numbers mean in future videos. And if you have any ideas for things that you'd like me to talk about in future videos, things you'd like to learn about, I would love to hear those from you. But right now, we're just going to focus on a couple numbers on this page, just two numbers really. As you can see, this is GameStop. GME is the ticker symbol. So it's like a shorthand to refer to the company. So GME refers to the stock of GameStop. And the two numbers I want to focus on are the one right here, which is the share price. So this is how much it costs to buy one share GameStop, one piece of the business. So you can buy one piece of ownership of GameStop for $150 and now 28 cents. You can see the market's open, so that number is changing and continue changing as I'm talking here. And the other number I want to focus on here is what's called the market cap, short for market capitalization. And what the market cap is it is the total value of all of the GameStop stock. So where this is one share, this is the total value of all the shares, $11.412 billion. And so how you get that number is very simple. You could take the share price and multiply it by the number of shares, and you would get the market cap. You could take the market cap, divide it by the share price, and figure out how many shares there are. So pretty simple. This is the value of all the stock. This is the value of one share of stock. And so we can actually calculate, say, if you were to buy 100 shares of GameStop, we can calculate how much of the business you would own. So what we do is right now we're going to use the price 150.33. It'll probably keep changing, but we'll go with that. So 150.33. Now we multiply that by 100 because we're going to buy 100 shares, right? So if we were to buy 100 shares, we would pay $15,033 for 100 shares of GameStop right now. Okay, now the whole business is trading for 11,412,000,000 something. So we're going to put that in. So we're going to divide this by 11,412,000,000 and add some zeros to get it up to the right number. Let's see. Yeah, so that's $11.412 billion dollars. And this is the value of all the GameStop stock we're buying. So we're buying 100 shares. That's the value of 100 shares. This is the value of all the shares. And we press equals and we come out with, this is the percentage. After we buy our 100 shares, we will own this percent or this fraction of GameStop stock. So if we multiply that by 100, so we're going to own 0.00013% of GameStop, of actual ownership of the company. Now, if you were to do that kind of calculation and actually come out to a number greater than 50% of this number, greater than 50% of the market cap. So if you were to come out to a number like, I don't know, 6 billion or 7 billion, you would own more than 50% of the stock. You'd own more than 50% of the equity. If you owned more than 50% of the equity, you would have a controlling stake in GameStop, which means you get to make all the decisions for the company. You control the company, you are the sole decision maker because you own more than 50% of the stock. Now, even if you own less than 50% of the stock, you can still participate in the governance of this company. Most companies have annual meetings where you can get what's called a proxy card and you can vote on different shareholder measures. You could even propose your own shareholder measure if you wanted to. But you get to vote on things like who the directors of the company are, who the CEO is, and any other kind of ballot measures that are being proposed by other investors or leadership of the company. And you can propose your own too. If you wanted to, say, get rid of the management, you could make a proposal as a part owner of the company. Even owning just one share of GameStop, you can make a proposal to try and get the management ousted from the company, replace them with somebody else. You could try to even replace them with yourself, technically. You probably wouldn't have a very good chance of winning in most cases, but you could do it. And there have been cases where, plenty of cases where shareholders have actually thrown out management, or where there's been what's called a proxy fight, where certain shareholders or group of shareholders fights with management for control of the company, and sometimes wins. So this is a real thing. When you own, your 1 share or 10 shares or 100 shares of GameStop or Apple or Coca-Cola or whatever company, you are truly an owner in that business. You're entitled to receive reports of that business, entitled to listen to management statements. You're entitled to, you can get a lot of those things even if you're not a shareholder, but you really are an owner of the business, entitled to go to the meeting, entitled to vote, and you have some level of control over the business. So the stock market is basically just where these shares are sold. So overall, so you have behind me here, you have the New York Stock Exchange. See it? Is my background. So that's one of the main exchanges in the US, the New York Stock Exchange, and the other main one is the NASDAQ, which is almost entirely electronic trading. And I believe the New York Stock Exchange is probably now almost entirely electronic trading as well. But yeah, those are the two main exchanges. And so The old way of doing things is you kind of have people literally on the floor of the stock exchange saying, you know, I'll buy 1 share of GameStop for this. I'll sell you 50 shares of GameStop for that price. And that's kind of still how the market works, but it doesn't necessarily usually take place with people, you know, yelling out their orders. A lot of times it takes place over the internet, electronically. But when you put in your order to whatever your brokerage is, say Fidelity or Schwab or Trade or any of the other ones, that order is going into the market to a computer system, and it is basically this bidding system of people offering to buy and sell ownership in these companies. That's what it means when you're trading or investing in the stock market, and when you stock into the business. All right, thanks, guys.